Let's get this session started. Welcome to everybody that is joining us live, to everybody that is watching us on the Facebook group, and to those as well that are catching up on the recording. We are talking about a topic that we get requested frequently here at VetYou, which is how to run a side hustle. Very much thinking about this from a finance point of view, from an accounting point of view, because we know that side hustles look different for everyone. For some people, you're selling online courses. For some people, you're doing some speaking on the side. Others maybe making products, selling products. Maybe you're doing a couple of extra locum shifts. There are so many different things to consider about what those other income streams are. And that's the amazing thing that we've got with our veterinary and vet nurse passports is we've got options. So we're going to be talking more around the accounting side of things, making sure that we can get you the information that you need to know where to declare taxes to, when to start declaring, how much we need to have to declare. Is there any amount that means that we don't have to declare things? So as we said, really popular topic. Just as we said already, before we do dive into this, we thought this might be of interest to everybody here that Vet Stay Go Diversify are running 2 combined events in October, on the 15th of October in London, and live streamed. There's over 24 hours of CPD that you get for the investment. There's a whole session of Sunday sessions that you can watch pre-recorded as well as the Saturday, where we're live in London and we're live streaming too. And VetYou are going to be there. We're going to have a presence. We're going to have one of the financial advisors there, and you'll see me on the freelancers panel, and you'll also see Paul in the Green Flags for Employment session as well, Paul being one of the VetYou founders too. So that early bird ticket special price does end this evening at midnight, so it's well worth checking out. We'll pop that link in the chat box afterwards. And we thought a particular session that might catch the interest of a lot of people on this call in particular would be the session of being your own boss, starting up your own business, because it's not just the finance side of things that we're taking into account here either. So if you do want more information on that, we can drop that across, but we just wanted to give that a plug because we are so passionate at VetYou about helping connect people with the people that help you. And that is a huge potential and opportunity for that, for career connections, networking, loads of cool stuff. So be sure to check that out as you get a chance after the call as well. Just a quick amount about us at VetYou before we dive into this session as well. I'm sure many of you have met us previously, many of you are on our email list. We will do some brief introductions as to us as well very shortly, but we're a team of 4 veterinary surgeons from a variety of backgrounds. We've been vets, we've been locums, we've been small animal vets, farm vets, equine vets, business owners, freelancers, influencers, coaches, mentors. And we just realized that so often we're not taught this stuff about finances, are we? We kind of expect ourselves to know it. And actually, there are trained, fantastic professionals out there that are keen to give us their knowledge and their expertise, like Nichola and Elspeth that we've got on the call today that I will introduce very shortly too. So we love to connect you with professionals that want to help, whether that's to help with things like pensions, income protection, investments, life insurance, critical illness cover, or whether it's accountants, things like side hustles, locum work. We are ideally the one-stop shop, the financial Wikipedia for you guys as a profession to come to as well. So I know we see many familiar faces on this call too. So as a little bit of an overall summary, you'll see here we're a veterinary-led community that helps all members of the profession secure their future prosperity in a way that works for them, bringing you to an independent you, because you're all individual. And just like with our own patients, we know that everyone has their own set of individual circumstances. And whilst everything that we talk about on this call tonight is educational, it's an overview, there are going to be specifics to each and every one of you on here as well. And as we mentioned right at the beginning, we are UK based, so we are doing specific advice to those in this country at the moment. If there is anyone that is dialing in globally and you want us to signpost you to someone that can give you more specific advice for your region, please do drop us an email, hello@vetyou.co.uk. We've got global friends, and I'm sure there is somebody that we can pop you in touch with as well. So thank you so much. I am going to make Nichola a co-host again because I can see she's rejoined us, which is super. So what is on the menu for this evening? Because I've done plenty of talking already. We're going to do some brief introductions. We're going to start talking about when do I declare. This is finances from our side hustle, of course. What are the key dates? What is the £1,000 allowance that people seem to be talking about? What records do we need to keep? what can class as expenses. We're going to have some time for live questions and answers, and we're going to talk about next steps as well. So whether that's that you want to take action and get in touch with Nichola or Elspeth, or whether that's that you want to sign up to one of our future events as well. So I'd love to, just before we do dive into this session fully, find out a little bit about who we've got in the room. Just because it may well be that we've got a room full of experienced side hustlers, we might have a room full of people keen to start, or a room of people that actually are already pro at this. So let us know. I can see we've got loads of people that don't have a side hustle but are looking to start. Got a side hustle, keen to know where to declare is about 20%. Experienced side hustlers, keen to pick up the tips, currently about 6% of you. So we'll give that another couple of seconds and let that roll. 70% don't have one yet, but looking to start. Awesome. So if you're getting everything financially in order right from the beginning, that puts you in really good stead, because it means that we can lay down the foundations as you start. So as we said, really clearly on this session, we're going to be talking about the financial side of it, because quite often that's the scary bit for us anyway, isn't it? When we dive into more specifics of what side hustles can look like, that's something where it's really useful being in places like Vet Stay Go Diversify, coming along to things like the VSGD live event that we've got in October to get an idea of what options that we've got out there and network with people that have already done this as well. So I'm going to end that poll. Awesome. So you can see there, we've got the majority of people don't have one yet, but they are looking to start, which is absolutely fine. You are in the right place to know about your finances from that side of things. So as promised, quick intros. Now we know more about who we've got in the room. This is the VetYou team. Again, some of us will be familiar faces to many of you there. So we've got Paul Horwood, who will be speaking at the VSGD live event in October. Ebony Escalona, who is the founder of Vet Stay Go Diversify and is a seasoned side hustler herself. Matt Dobbs, who has many roles and many hats that he wears, originally being a farm vet, being very deeply involved in business and being one of the real minds behind VetYou starting, because he knows what a difference it made having good, solid, timely financial advice right from the beginning. And finally, Katie, myself, who is, again, someone that does a lot of side hustling. I have many streams of income and have been very pleased to have the support of Nichola and Elspeth behind me, who are fantastic accountants that have helped keep me in order as the time has gone on as well. So finally, before I do hand over, why this topic? We touched a little bit on this whilst I was getting us live onto the VSGD page as well and onto the VetYou page. But we get so many requests for this. We're not taught how to do this stuff. There are so many times where people will take on like side speaking opportunities, or maybe they've started selling things online or on eBay, or they've started making and selling on Etsy. Perhaps they sell online courses, perhaps they've organized events, and there's going to be cash coming in there. And actually, I've seen so many people where this has kept them up at night as to, my God, should I be declaring this? Where should this go? This has grown a lot bigger than I thought it was going to be, which is fantastic. But at the same time, what do I start to do declaring this money? So hopefully this evening, we should be able to start answering some of these questions for you as we talk around the financial side of running a side hustle, particularly zoning into the tax side of things, because again, I know quite often we're all quite cautious of the taxman, understandably so. And hopefully this evening, Nichola and Elspeth from Harris & Co. Chartered Accountants and Chartered Tax Advisors will help us to decipher and myth bust and debunk some of these terms as well. So we're really pleased this evening to be joined by Nichola and Elspeth, who are both partners at Harris & Co. Chartered Accountants and Chartered Tax Advisors. Nichola is going to be leading the presentation and Elspeth is going to be in the chat box answering your questions. So please do get them in there. There is no such thing as a stupid question. If you're wondering it, somebody else is probably wondering it as well. So get it in there. You can send it anonymously if you want to send it directly to myself or send it directly to Elspeth. That's absolutely fine. But please do use this time wisely. Use it for you and have your questions answered, because nobody goes through this stuff with us. And because so many of you are there right at the beginning of this journey, you can get the foundations put in place and you know what those dates are and you know what you're working towards and you know the people that can help you as well. So as I said before, I've been thrilled to have Nichola and Elspeth on my team for my side hustles the last 4.5 years. They've helped smooth the transition for me, making all those different streams of income come together and helping me understand what I need to do and helping me in the background as well. So we're really thrilled to have you both here this evening. And Nichola, I'd just like to say a huge thank you and welcome to the VetYou audience. Thank you for being here.
Thank you, Katie, and thank you for your kind words as always. It's been a pleasure, and I'm delighted. We're both delighted to be here today to share some hints and tips with you all of the audience as well.
Oh, thank you so much. And I know, Nichola, you have worked, and Elspeth, of course, too, with a number of veterinary-based businesses over the years as well, as a result of the work that you've done and the help that you've given us with the webinars for VetYou as well. So I'll let you read through this if people want to read through Nichola's bio, but you'll also see that she manages a number of healthcare services, GPs, as well as veterinary businesses. So she's well versed in this profession as well. So I'm going to start asking you, Nichola, some of the questions that are coming up from our audience very frequently about side hustle cash. And the first one is, where and when do I need to declare this money? And do I need to register for self-assessment? I think they're two big questions to start with.
Yeah, you do need to declare. There's a very simple question: money that you earn from a side hustle, subject to the trade and allowance, which we're going to come on to a bit more in detail on the next couple of slides. You don't have to register as quickly as some people might think. You don't have to do it before you start, but again, we'll come on to those dates shortly. And yes, if you do need to declare that money because your income exceeds the trade and allowance, then you do have to declare that to the taxman, and you do that by registering for a self-assessment tax return with HMRC.
And you can just register for that self-assessment tax return on the HMRC website, is that right?
It is. It's very simple. You just Google register for a self-assessment tax return, and it will take you to an online form that you can submit and complete and submit online.
Amazing. And I think you touched on it there as well, Nichola, and we can move on to key dates in a minute too, but you don't have to do it like immediately right now, because I think this is a panic sometimes for people is, oh my God, I've just earned all this money or this amount of money, and should I have already been registered? So I think that'd be good to go over, wouldn't it?
Yeah, absolutely. I think there is a fear that you can't do anything until you tell the taxman, but it's not quite like that.
And hopefully that sets people's minds at rest a little bit. I know you're going to run through these as well for people in terms of those dates, and we'll come back to that trading allowance in a minute as well for that minimum amount to declare. So essentially, like in summary to what you've just said, yes, you do have to register to declare that cash if it's over a certain amount. You've got some leeway to do it, and I'll let you run through these dates as well for people to understand that a bit more.
Yeah, absolutely. So we have a very odd tax year in the UK, very odd dates. It starts on the 6th of April every year and ends on the following 5th of April. So we've just finished on the 5th of April 2022 what we call the 21-22 tax year, and those are the tax returns that we're doing at the moment. But surprisingly, if you did earn income, let's talk about the flexibility and the delay you kind of have until you have to register. That if you started trading, for example, on the 6th of April 2021 or May 2021, you actually have until the 5th of October 2022 to register for a tax return and register for self-assessment. So it's a considerable number of months after the tax year has ended that you actually have to register for self-assessment tax return. So it is not immediate. It's by far and away not immediate. There is then deadlines for submitting the tax return. It's a bit of a non-point at the moment, but paper tax return deadlines is midnight on the 31st of October 2022. We don't do many paper tax returns anymore. HMRC prefer it all online. The online tax return deadline is midnight on the 31st of January 2023. So you can see you have 10 months, we're just short of 10 months to submit a tax return after the end of the tax year. So again, a considerable amount of time to submit. And again, the same deadline for paying the tax that's owed. So any tax that's owed on money that you earn between 6th of April 2021 and 5th of April 2022, that tax isn't actually owed until the 31st of January 2023. So again, a considerable amount of time to hold on to that money before you have to pay it. And usually it is one payment on the 31st of January 2023, but there are certain rules called payments on account, and if you fall into those, then you have to make payments on account towards your next year's tax bill, which means then you make additional payment in 31st of January and a following payment on the 31st of July. And that's just a way of HMRC accelerating tax for the next year's tax bill by making deposits against it. But you only get into payments on account if your tax bill is over £1,000. So you'd consider amount of profit that you've had made to get into that for a side hustle. So we won't go into too much more detail on that. As we've already...
Go on.
Sorry.
Go for it, Nichola. I was going to ask you another question, but please carry on.
Okay, I'm just going to go on to the last point on the slide there. It is good to be organised. It's good to get in there as quickly as possible and get there before the deadline. It does take a little bit of time to register online for your own self-assessment tax return because HMRC have to send out authority codes in the post, which takes a couple of weeks. So it is good to be organised. Please don't think that you can just register and submit a tax return on the 31st of January online. That won't work.
No. I always found those codes so frustrating because I'd be like, oh, I know I have it somewhere. So like keeping a good record of the numbers and things for when you're registering on those websites is really helpful as well. And so bearing in mind, Nichola, we've got so many people that are on the call at the moment, like 70% of people haven't actually started yet, but are keen to get started. What is, just so we're really clear, the date now for them to get registered by, if they were to start trading next week?
If we start trading next week, it will be the 5th of October 2023.
So plenty of time. Amazing.
Plenty of time. And we're going to come on to trading allowance as well. So again, I wouldn't rush too much towards it for reasons we're going to come on to on the next slide.
Awesome. And I think that leads in nicely because I think more and more people have started talking about this because you brought it up on a few of the webinars that you've done for us kindly already, Nichola, is this £1,000 trade-in allowance that I've heard a few people post about on forums and start to say, oh, you're allowed to earn up to £1,000 without declaring it. Is that true? How does that work?
It is true. It is what we call a de minimis limit that HMRC have set. And it's around income or sales. It's not around profit. It's around £1,000 worth of sales that you make, so before expenses. And HMRC introduced it as a de minimis limit because I think they felt that the number of tax returns for people that are doing side hustles or starting up a business that might start and then might run its course before it got established, it wasn't really worth the administration for HMRC or for the taxpayers to declare income less than £1,000. They consider it more of a hobby, if you like, that they don't necessarily want to be declared. So it works, as we said, around your income. So if income or sales, for less accounting term, are less than £1,000 in the tax year, then you do not need to declare it at all. You don't need to register for a self-assessment tax return. You don't need to tell HMRC at all. You can just keep the money, not declare it and not pay any taxes on it. If your sales are more than £1,000, then HMRC are interested in those and you must declare them and register them for a self-assessment tax return by the dates we've just discussed. So just going back to the point we just covered earlier, I think rather than being too keen and registering on day one or pre-day one, it is worth waiting until your sales have exceeded £1,000 before you start considering registering for self-assessment, because otherwise you could end up doing an unnecessary tax return, or worst case scenario is you forget to do the tax return because you think the trading allowance is applied, but you've already registered and HMRC hit you with a fine because they're expecting one. So I think, yeah, if that makes sense, that's good. It's good just to hang on a bit and make sure you're exceeding the trading allowance before getting carried away and telling HMRC.
And that ties in nicely with what you said previously as well, Nichola, doesn't it? About keeping good records of knowing exactly what's come in. Yeah. And just adding this in, because this ties in quite nicely with the question that we have pre-submitted is this a total or per side hustle? So say you sell £200 worth of stuff on eBay, you do a couple of talks for £100 each, then you, I don't know, sell some other bits that you've started making on Etsy and they are all smaller than £1,000. It's collective, is it?
It is, yeah. It's £1,000 from all sources. When you're self-employed, HMRC don't consider you to have different businesses. The business all are just you. So it's £1,000 from all sources of income.
Yeah. And like you said, that's actual sales turnover rather than profit. So again, and I know you're going to do us a bit on record keeping too, but making sure that we've got a track of that and see when we hit that £1,000, then it's worthwhile starting to register from what you said.
Absolutely. Yeah.
Awesome. And I know, Nichola, you're going to go a little bit more into how we can use this £1,000 as an expense. And again, I think seeing these examples worked through is going to be really helpful, but at the same time, just as credit to how knowledgeable you guys are as accountants and how useful it is having someone in your corner that understands this. So do you want to explain a little bit more about what this means?
Yeah, so the £1,000 trading allowance is the de minimis limit. It's the limit above which you have to declare income, or below not declare income. But it also has another purpose as well, as it can substitute for your expenses. So I think it's easier to see how that works by giving you an example, so as it can feel a bit conceptual. So we've used an example here of where sales of £1,500 and you've incurred expenses of £500 to make those sales. So if you were to do a normal profit calculation, you would have made £1,000 worth of profit, £1,500 less £500, very simple. However, you can substitute the trading allowance for those expenses of £500. And therefore, by taking that £1,000 of trading allowance away from your sales of £1,500, you actually only have to declare £500 of profit to HMRC and pay tax on £500. Sounds too good to be true, but it is perfectly legitimate, and the purpose of that allowance. So again, one of the things that we do when we're preparing tax returns for clients is one check we'll always make is, our expenses more than £1,000? If they're not, we get rid of them, substitute the trading allowance, and save the clients a little bit of tax.
Which is, like you say, another testament to having someone on board that knows what they're talking about and can save you that little bit as well. And I know you've got more to add to that example wise as well. So again, about expenses being over £1,000.
Yeah, and it is a choice. You don't have to use that £1,000 trading allowance, I think is what we're looking at here. If it is more beneficial for you to use your actual expenses, then you can just use your actual expenses. So in this example, we've got the same amount of sales and we've got actual expenses of £1,250. So slightly less profitable business, where using the normal profit calculation, we'd have a profit of £250. If we substituted those expenses for the trading allowance, we'd be paying tax on £500. Therefore, why would we substitute that trading allowance? We'd use the original expenses and declare £250 worth of profit and pay tax on £250. So it's trying to drive out there is it's a choice. You can use it or you don't have to use it.
So we're clear again in terms of Nichola. So if somebody has just started out, they've got that £1,000 to kind of use up to start with initially, they don't have to declare any of that first £1,000 once they get over that budget level. So we can kind of just not pretend that didn't happen, but have records of it, but know that we don't have to declare that bit. Amazing.
Absolutely.
Which hopefully puts a few people's minds at rest, because I know this always came to mind for me when I was in practice and full-time employment and had like the odd speaking gig, or I was paid a little bit extra to go and give a small CPD or something. And I was like, oh my God, should I be doing something with this cash? And it was finding out about this £1,000 that probably let me sleep a little bit better at night as well. And I think the final question in there as well is, if you've got a side hustle and it makes a loss, to know a little bit more around that as well. So I know you're going to do as a worked example before we dive more into like how much tax we pay and expenses and things like that.
Yeah, so I mean, it is fairly common in the first year of a business or a side hustle to make a loss, particularly if it's say a capital intensive business such as a photographer or something that involves computers, where you've had to invest in a lot of equipment to set it up. So it's common in that first year to make a loss. And again, this example just demonstrates that actually if you'd spent £2,500 in that first year to generate those sales of £1,500, you would have made a loss of £1,000. Using the trading allowance, again, we'd be back to a £500 profit. So why would you pay tax on £500 by using the trading allowance when you can actually claim a loss with HMRC? And put my teeth back in, sorry. Again, in that example, we'd claim the actual expenses, claim the loss of £1,000, and actually again, where you are running a side hustle, you are making a loss on that side hustle. There is what we call sideways loss relief. Less technical terminologies, we can offset that loss against your other income. So if you're working, we can offset it against your job, and yet that can generate a tax refund. So the tax that you've paid on your main job, you can get a bit of a refund against it for making that loss on that side hustle, which is again something that's not commonly known, and just worth thinking about, particularly if it's quite an equipment intensive business and you've outlaid a lot to get set up.
Well, good insight. And someone's just asked it here in the chat box, actually, Nicola, it fits in really well. I know we've talked quite a bit around this already, but just so we've got clarity, they've said if you have an income over £1,000 and have to declare, presumably you have to declare the first £1,000 as well.
Yeah, absolutely. Yeah. So yeah, if you'd made £1,000, a very extreme example, if you've made £1,001 in sales, you would have to declare that because it's breached the trading allowance of £1,000. But then you would consider the last two slides about whether you'd use the trading allowance as your expense, in which case you would have made a profit of £1, or whether you use your actual expenses because you might have spent more than £1,001 and you've made a loss.
And declaring that trading allowance for people doing a self-assessment, is that clear the way that they do that, or is that where an accountant comes in?
I'll be honest, on the self-assessment software system, we don't use that. We use third-party software, and on our software there is a little box, a tick to say that you want to claim it. And I would imagine that there's the same on HMRC software as well. It is fairly straightforward to follow.
Perfect. Thank you so much for clearing that one up. So yeah, there's no tax to pay on that £1,000, which is a relief, at least. So I think the next question that's coming up is, what tax do I actually pay? So I'll hand over to you for that one, Nicola.
Yeah, that's a difficult one to answer because it depends on your other circumstances. It depends what your earnings are from other jobs, whether you have another job. We're talking side hustle, so you probably would have. And it depends what you're earning from that other job, whether you're a basic rate taxpayer or you're a higher rate taxpayer, what profits you're making from the side hustle, so whether national insurance kicks in for the side hustle as well. So it's a bit of a cop-out, but it really does depend.
And I know you've got this explained a bit more on the next slide, and this is us talking about being registered for self-assessment, and we come on to limited companies later, don't we, as well? But I'll let you run through this one a little bit as well, Nicola.
Yeah, so we're talking about self-employed businesses here, where you just register for self-assessment as a self-employed individual, completely separate to having your own limited company. And where you have a self-employed business, there is no distinction in tax or law really from yourself. The business is you, and you are the legal entity. So everything that you earn becomes relevant to the tax rates you pay on your side hustle. So there's two types of tax that you would pay on the profits from your side hustle. You pay income tax, and again that depends on your other income. So if you're a basic rate taxpayer and your profits from your side hustle keeps you within basic rates of tax, which is roughly around £50,000 a year in total, you would pay 20% income tax on that profit from your side hustle. If you're a higher rate taxpayer, so between £50,000 and £100,000, it's 40%. It's very complicated because over £100,000 you start to lose your personal allowance, which then creates an effective tax rate of 60%. And then when you're over £150,000, sorry, you become what we call an additional rate taxpayer, and you pay income tax at 45% on any income that you earn over that and from your side hustle. We also have to consider national insurance for self-employed people and for side hustles. That doesn't kick in straight away because you have another national insurance threshold, if you like, a national insurance free threshold, which for class 4 national insurance is £11,908 for this current tax year. So that means that you don't pay any class 4 national insurance until your side hustle profits exceed £11,908 in that tax year.
Okay.
Where you do, the class 4 national insurance rate is 10.25%, basically within kind of the normal basic rate thresholds that you'd know about. And then where you become a higher rate taxpayer, so the profits from the national insurance exceed £50,000, profits from the side hustle, exceed £50,000, you pay the higher rate of national insurance, which bizarrely is only 3.25%. You also have to pay class 2 national insurance when you're self-employed. That is £3.15 per week, or £163.80 a year, and that is also paid through the self-assessment tax return, but again is only payable where profits exceed £11,908. The little bit in brackets is a rather technical point. If your profits exceed £6,725, you are treated as having paid class 2 without actually having to pay anything, which basically just means that you get your stamp for national insurance without actually having to pay any national insurance, which goes towards your state pension and other contributory benefits. And it's also important to note about student loans. Student loans are also collected through a self-assessment on profits from your side hustle. So if you are putting together some savings to pay your self-assessment tax, don't forget to save for your student loan as well as the tax and potential national insurance as well.
And thank you so much for explaining that, Nichola. I realise at the moment there's so many intricacies to tax and national insurance and different levels that things kick in as well. Is there a simple way for people to figure out like how much they should be putting on one side, or a way that people can figure that out, as much as obviously they can go through self-assessment, they can get the help of an accountant on board as well, but how do people find out that exact amount and make sure they've not done that wrong, as it were?
With the help of a tax calculator, I think, is a simple answer to that. So I mean, if you are a basic rate taxpayer and you know your total income is going to be within basic rate, so less than £50,000, you're talking worst case scenario 30% if you're paying class 4 national insurance, but that's only going to kick in if your profits from your side hustle exceed let's say £12,000. If you've got national insurance, student loan, to pay on top of that, you're talking the best part of 40%. Very simplistically, because we are talking about very simple side hustles, if your profits are less than £12,000, just concentrate on the income tax. So if you are a basic rate taxpayer, save 20%. If you're a higher rate taxpayer, save 40%. And if you're fortunate enough to be an additional rate taxpayer, save 45%. It's where your profits are getting more than £12,000 from your side hustle that you probably need to speak to somebody that knows a bit more about tax to work out your actual tax rates.
That makes perfect sense. So if you're under that level, then stick with keeping an eye on the tax bracket that you're in and keeping that percentage on one side. And if you're heading over that, then start talking to someone like yourself, or sooner, obviously.
Yeah, and obviously don't forget student loan as well. So if you've got student loan repayment, it's 20% plus your student loan repayment.
Yeah. And like you said, there are calculators that you can look at as well, just to get a bit of a ballpark figure as well. And like we said, we've got so many people that are on this call right now that are starting out from the beginning, that having those things in place, because I'll tell you, like, being completely open and honest with all of you, that was probably one of the pitfalls that I fell into. It's just like, oh, look at this money that I'm making. And then afterwards was like, oh, I should have really kept some of this on one side, and then had this massive rush at the end to be like, right, we'll make up the amount that I should have kept as well. So put the good solid habits in place in the beginning. And I guess the next question comes around, like, where and when is that paid? Like, how is that payment made for that tax? We've put the money on one side according to what tax bracket we're in, according to the amount that we've turned over to, and whether we've got a student loan or not. Like, what happens from there?
Yeah, so we go back to these key dates again, really. So we're assuming that we've started the side hustle a year ago in 21-22, so we're about to do our first tax return. And as we said, the tax isn't due until 10 months later, really, the 31st January 2023. We need to register for a tax return by the 5th of October 2022. The tax return is due by the 31st January 2023. And in answer to your question specifically, that's when the tax is due the same date, 31st January 2023. So if we're talking about starting a side hustle now, we just roll all those dates on 1 year. So we're talking about tax being due by the 31st January 2024. There are payments on account potentially which could fall due if the tax bill is more than £1,000, and which we discussed previously, which would mean you'd have to pay an additional amount of tax in January 2023 and July 2023 on account of the following year's tax liability. But I always try to explain to clients that if you're saving the right amount of tax from the very first invoice that you raise, because of the delay in paying tax, you should have the right amount of tax saved, even to pay those payments on account in January 23 and July 2023, because you've been saving the right amount of tax from day one.
Amazing. We've had quite a few questions that have started coming in, Nichola. So some of these I know we're going to cover as we go further through on expenses and things like that too. And around, there's a couple of bits about income from properties. But just as we're on this point as well, Nichola, about is there a threshold for student loan repayments on a side hustle, or is that just dependent on like your overall income up until that point?
It does depend on your overall income. And I'll be honest, I can't remember the exact thresholds that they kick in because it depends on when you're on a plan 1 or plan 2 in repaying your student loans. So there is a threshold before you start paying student loan at all. But then when you do start earning extra income, your student loans just flow on from that, really.
Yeah. So presumably if you're already repaying student loan from your other income streams, it will just, like you say, be coming out of your side hustle already if you're already at that threshold.
Yeah.
Perfect. Thank you for answering that one. And actually, just rolling on very nicely from the question that we've got in the chat box. And again, I'll come to the others because I've had a couple of direct messages too. We've got, what can I claim as expenses? And then somebody else has asked in the chat, if you've done training, bought equipment, etc. for a side hustle, but not started the business in the same year, but started the side businesses a couple of years later, do the expenses count as it's not in the same tax year, if that makes sense? So we can probably tack that on to what we're going to talk about as well here, Nichola. So tell us a bit more about expenses for side hustles.
So yeah, expenses, to keep it very simple, are what reduce that sales figure into your profit, and it's profit you pay tax on. So it flows that the more expenses that you claim, the lower your profit, and therefore the lower your tax bill. And very simplistically, the expenses that you can claim are costs that you've incurred to run your business. And if you've got a receipt in your hand that you've spent that money because of your business, then generally, more often than not, that expense will be allowable. It's the issues that you've got where they're not allowable is where there's some kind of dual purpose. So clothing's a good one. So if you are doing a locum shift and you're wearing, your own trousers and your own polo shirt or something, just normal clothes, then those wouldn't be allowable. But going through a locum shift where you've bought scrubs and specialist clothing, etc., to do that shift, then those would be okay, because you wouldn't be going out on a weekend in your scrubs usually, and the specific business clothing. Food is another good one. You've got to eat to live. So your weekly shopping isn't allowable, but if you are working away and you can't eat from home or do your normal shopping, then your meals away are okay as well. So it's really, again, looking at those two expenses, were they for business purposes? Did I have to buy that clothing for the business? And did I have to eat that food because of the business? If that makes sense.
Makes total sense. We've got a full list here as well, don't we? So
yeah, there's lots of other expenses, a little bit more specific. Your memberships, your professional memberships, professional subscriptions are all perfectly allowable because you need those. You have to pay those to be able to practice. We've just covered uniform, costs and maintenance equipment, so stethoscopes, other bits of equipment that you might buy yourself to do locum shifts. Absolutely fine. Mobile phone, again, if you're using your mobile phone to run your business, which more likely you are than not, to take calls, bookings, make sales, deal with suppliers, etc., absolutely. Again, we'd have a business use element of that. So if it was, again, the percentage depends person by person, but if you had half of it business use, half of it personal use, we'd only claim half of the cost as for business use. Computer equipment, again, if you need to buy that to work, to do your business, absolutely fine. Mileage and travel is a really good one and is a really good deduction if measured carefully and accurately. You can claim the cost of running your car, petrol, depreciation, insurance, etc., if you wanted to, on a business use basis. Or a lot of people seem to prefer the mileage route, where you just calculate the number of business miles that you've done and claim 45p a mile for the first 10,000 miles, and then it's 25p a mile thereafter. So a nice simple way of monitoring it. And again, that is a really good one to keep track of, because that, if you're doing a lot of driving around for work, that can really add up quite quickly. We've covered professional equipment, accountancy fees, so the cost of paying for an accountant to do your taxes and your tax return is that tax deductible as well from your profits. Stationery, office equipment, printage, postage are more likely these days. Computer subscriptions, Office 365, Zoom, LinkedIn, all those kind of things, absolutely fine. Books and publications, training would come under that. Anything that you need to do to keep up to date with CPD, to learn, to keep practicing. Pension contributions are an interesting one. They're not technically an expense, but they can be used to save tax. So if you are paying higher rates of tax, for example, putting some of that money that you're earning into a pension, as well as being a financial investment for your future, can be quite tax effective as well. And then also working from home as well. If you're running your business from home, it often costs you, I hasten to say, a little bit more in gas and electric and for heating your home while you're at home. So you can claim a little bit of that against your profits as well for those additional costs of being at home as opposed to being out at work.
And just looping back quickly to the question we've had in the chat as well, if these were expenses from a previous year as setting themselves up for the business that they then go on to run, like how does that work? If you say, for example, I bought this camera equipment for my photography business, but I bought it 2 years ago and now it's been used for this business now.
Yes. So yeah, you can either, if you've started trading and for example, it's just fallen the wrong side of a tax year, so you started 6 months in and then you get your first sale that just falls into the next tax year, you can do a tax return, claim the losses, carry those losses forward to the following tax year. Or if you've not quite got the business up and running yet, but you've made what we call pre-trading expenditure, yes, you can carry that forward. I think for about 6 years prior to starting trading as well. So again, there's no hurry to get the business started, really.
Amazing. And I can see we've got a couple of questions around expenses here as well. We've got, would payment for mentoring such as business coaching be an expense?
Absolutely. If you need that to get the business up and running, and is a need, then yeah, absolutely.
Amazing. Thank you, Nichola. Someone's asked about childcare. Like, does that count as an expense?
Unfortunately not. It would be very nice if it would, but unfortunately not, no.
Good questions, everyone. Thank you so much for these. And just looping it up, someone's put, what about physiotherapy? Do you mean in terms of physiotherapy for looking after us for our business, or in terms of like doing physiotherapy? Just let us know a bit more on the question so we've got more context. And then finally, just another question while we're on expenses, because everyone's rolling these in. Thanks for participating so much, everyone. If you have a very large pre-trading expenditure, e.g. multiple thousands, can you claim a bit year by year to avoid tax, or do you have to claim all of it in the first year that you make profit?
You would claim it in the year that you made that expenditure, but it shouldn't really matter in terms of saving tax, because as we said at the beginning, if you've got other income, so you're a high rate taxpayer, for example, from your other job, you could offset those losses against that and get a tax refund up front, which is really nice because, you know, when you're starting your business, you've had a big expenditure, to get a bit of tax refund to boost cash flow would be really nice. Or if it's not, you can carry that loss forward indefinitely.
Perfect. And again, I think when we've got these intricacies of these questions as well, that the benefit of having someone on board that can help you through this as well, I think is huge. And we just had a bit of clarification on the physio question. Is looking after ourselves to continue to be able to do, for example, large animal work, could we claim physiotherapy as an expense in looking after us? Like, does that count?
That's an interesting one, because it's going back to that whole trying to avoid using jargon, but we use the term wholly and exclusively. So it's the expenses have got to be wholly and exclusively for the business. And going back to food and clothing, they aren't wholly and exclusively for the business, because you've got to eat to live and you've got to wear clothes because that's the law. Physiotherapy is a bit of a grey area in that as well. So if you can prove that having that physiotherapy is wholly and exclusively because of your business, and it's, you know, working with large animals is taxing on the body, and it's an absolute need, then it's probably still a bit of a grey area, but probably okay. Whereas if you are working from home over a computer and you got a sore back and then need a bit of physiotherapy to release a bit of tension in your shoulders, probably not.
And I appreciate you taking these ones, because they are a bit more specific and a bit more niche, but well done for asking the questions, everyone. That's why we've got experts like Nichola and Elspeth come join us as well. And I think the next part that we're going to talk about, and I think this is something that loops around to what we've already covered quite a bit already, is about records to keep, because obviously it sounds like there's a lot of benefit to maybe claiming back stuff that has been a preemptive purchase, and making sure that we know how much has come in, so we know when we're going to get to that £1,000, and also making sure that we understand how much tax we're keeping on one side. So Nichola, what records do we need to keep for a side hustle?
So you need to keep records of the income that you're generating. So you'd have to raise invoices for sales that you're making, or if you're selling on eBay, downloading your eBay statements or Amazon statements, etc., if that's where you're making your sales from, or website reports if you're doing them online. So keeping that record of that income, wherever the source of that is. Ideally then summarising those on a spreadsheet, so just having a very simple spreadsheet with dates of invoices, your customer, the amounts that you've invoiced, and keeping a running total of those, which will help with the trading allowance. And then on the expenses side, really keeping together the receipts of the expenses that you've incurred. You are allowed to keep those digitally now, so if they are, you know, Amazon, eBay purchases, things like that, online purchases, keeping those digital invoices, keeping your bank statements, keeping a record of how much you've put into the business, invested in the business. So you might give it a bit of seed funding, keeping a record of that, because you don't want to pay tax on money that you've invested in the business and mistake it for a sale. And also keeping a record of money that you've drawn out of the business as to spend on personal things, the profit that you've drawn out for your own use. Because again, we're not allowed a tax deduction for money that you've drawn out yourself. This could be kept in a number of different ways. We used to have big red cash books that was kept on a paper form. These days, you're more likely to see it on spreadsheets. And again, as well as an income spreadsheet, you can have an expenses spreadsheet with dates, amounts, suppliers, and information about detail about what it is that you've bought. Or a step further than that is using some bookkeeping software. So I'm sure everybody's seen the adverts for the cloud accounting software that's on the TV quite regular, and they can have their advantage as well in terms of being a bit more convenient. It's also worth noting at this point that you may have heard about making tax digital for self-assessment, which is coming up. I've got a bit more about it on the next slide. That is about digital record keeping. So something to bear in mind in terms of choosing spreadsheets or bookkeeping software, perhaps. And it's important to note that we must keep records for at least 5 years after the tax return deadline, just in case HMRC were to raise what we call an inquiry into your tax return, because they may want to see some of those records. And I'll just give an example out at the bottom of how that would work for a 21-22 tax return. Just spotted the typo there.
Awesome.
So it's quite common sense, really. It's just keeping together the information that you've got in a format that's easy to follow and to keep and to understand, really.
Yeah. And again, we said we've got so many people on here that are right at the beginning of wanting to set up and start a side hustle as well, and getting those things right in place from the beginning, whether that looks like a spreadsheet, whether you're using one of the accounting softwares, and then it's all there. It becomes a habit as well. I think looking back, having many side hustles over the years, I wish that someone had told me that right at the beginning and said, get your records clear from the start, because it will make your life easier as well. So superb advice there, Nichola. And I know you're going to talk a little bit more around making tax digital, because whether you have heard about it or you haven't, it is coming for us at various points over the next few years, isn't it?
It is. We've had Making Tax Digital for VAT for about 3 years now. And it's been rolled out to cover self-employed people and also landlords as well. So there might be some people on here that have a rental property with rental income. It will also apply to those as well. And it applies to taxpayers where, again, we're talking income here in sales, not profit. So the top line, where they're over £10,000. So it's not a huge amount of sales, really. It's way below the VAT registration threshold. And for property, it could just be one property that you have with rental over £10,000. So it can capture some quite small businesses, really. And Making Tax Digital is really around the way that records are kept by taxpayers. And that means that you must keep records digitally. So those lovely red cash books that we used to have, where you keep them all written and handwritten, are out. We're not allowed to do that anymore. HMRC would like taxpayers to use bookkeeping software, so the cloud packages, again, that you'll see advertised on the TV. We do have the ability under Making Tax Digital for VAT to use spreadsheets with something called bridging software to make the submissions to HMRC. And we think that's probably going to be available for self-assessment as well, but is yet to be confirmed. So spreadsheets are probably still going to be okay and classed as digital. The other big change is that those affected by MTD will no longer have to just do one tax return and one submission to HMRC a year. They'll have to do quarterly updates as well as their annual submission. So you have to press a button and submit some reports to HMRC on a quarterly basis, as well as doing your annual submission. So a lot more submissions to HMRC, basically, if you're affected by MTD. So again, if you not, and this is going to be implemented from the 6th of April 2024, but if you are starting a side hustle now and you're expecting your sales to get over £10,000, it's probably a good idea to make sure that your record keeping is compliant now, rather than having to change in 12, 18 months' time.
And I guess that goes for if anyone catches this on the replay after 12 months after this session, us being currently just at the end of August 2022, it's worth checking back in and see if we put an update out, or what the current advice is at that point as well, with this changing, I guess, as well.
It is, yeah. And with everything HMRC, it is prone to change. This deadlines could still shift. But it could still be delayed, but this is what, as a profession, we're working towards at the moment. So,
and just on the topic of, I know you mentioned landlords and property owners, I had a direct question that I thought was a good time to just pop in there as well. And they've just asked, what about income properties? If you have income from this and from a side hustle, are you automatically over the £1,000 if the income from the property is more than this? Like, it's not a separate pot for side hustle?
It is a separate pot, because there is also £1,000 property allowance as well. So again, you don't have to declare income from property if it's less than £1,000. If it is over £1,000, yes, you do. And also, in terms of an expense, the £1,000 property allowance works in the same way as the trading allowance, in being a substitute for expenses, if that's better off for you. But it would be very rare that you would earn less than £1,000 from property.
True. I guess when you start adding up monthly incomes from a property, it's hard for it to be less than that, isn't it? So hopefully that answers the question. Again, if there is anything that anyone wants to talk through directly or wants to look at getting an accountant on board with their own situation as well, I've popped in the chat box a link where you can book in with Nichola. We've also got the awesome Elspeth in the chat as well, who is another partner at Harris & Co, who is answering your questions too. So please do pop them in there if you've got any. Make the most of this time. I realise we are coming to time, but please do. You've got the recording. We're going to keep going and make sure you've got all the information, because Nichola and Co always give us so much and answer so many questions. So thank you everyone for being here. I know we've just got one last bit on here as well, don't we? With regard to making tax digital, but I think you've talked a bit around this stuff. Yeah. So
yeah, I think just be prepared. Yeah.
And I know one of the questions that we've had come up as well, because we've talked right around being set up self-assessment, running this as like a self-employed return where you are the business. Is there any benefit to running your side hustle as a limited company, which is a separate entity and is different? So again, we can dive further into this probably at another date to go into it in real detail, but can you give us an overview of like running a side hustle as a business? Like when would that be worthwhile, was running it as a limited company, which is different from self-assessment?
Yeah, this is a whole other topic on its own, so we'll try and keep it very high level rather than diving into detail. The short answer is you can have a limited company, and in some circumstances this can be better for you, particularly if you're already a higher rate taxpayer from your job, because companies can be a little bit more flexible around profit extraction and timing of profit extraction. But they are, as you've implied, Katie, separate legal entities, so have more complex accounting requirements, tax requirements, and filing dates, which we put on the slide are outside the scope of today's webinar. They are more expensive to run because they have more complex requirements, and they're also a little bit more harder to get rid of because they are a separate legal entity. And you don't have to rush into one or the other. If you want to give your side hustle a go, see whether it's going to be successful, try it out as a self-employed business, because it's much simpler to start up, close, report, etc. And then if things start to go really well, then think about converting to a limited company later down the line. Or if you are already a high rate taxpayer and you think the flexibility will be good for you from the very beginning, then speak to an accountant. They'd be more than happy to look at your personal circumstances and advise what would be the best structure for you.
Thank you so much, Nichola. I realise, like you say, that's a whole separate beast in itself to potentially fill a whole webinar as to running a limited company and the intricacies of that as well. And again, if you did want to talk through your own circumstances, if, like you say, you are a higher rate taxpayer and there might be some advantages, then that's why we love working with Nichola and the rest of her team at Harris & Co, because they're not only accountants, but the tax advisors too. So they can make sure that they look at the best way to work it for you as well. So I know we just had some jargon busting go on in the chat as well, which is sole trader the same as self-employed? And Elspeth has answered, yes, it is. I think people tend to use the terms a little bit interchangeably, do they, Nichola?
They do, yeah. And yeah, I apologise if I am a bit too jargony. It's very difficult to avoid sometimes, but
I think
yeah, absolutely right.
Doing well. So please do keep getting your questions in the chat box and have those busted by our fantastic accountants that are on board here as well. And I think that rolls us really nicely into the next question, which is, do I need an accountant? I think inherently HMRC puts the fear of God into many of us, and I certainly it did do for me for years, and I know what difference it made me having you guys on board for me, so that I could be like, please help sort this out. What do I need to do? When do I need to pay them? Can you make sure that I am taking as much advantage of the allowances that I've got as well? But can you tell us a little bit more around like working with an accountant, why that's valuable? Do we actually need it for a side hustle, and to run through that?
Yeah, I think the very simple answer for limited companies, yes, you do need an accountant. The requirements are complex, and HMRC and Companies House don't make it very simple to allow you to do that yourself. You need kind of specialist software to be able to do that. For a self-employed person, sole trader, you don't necessarily need an accountant. You can file your own tax return via HMRC's own system. But I do like to think that as accountants, we do add value to clients for some of the reasons that we've discussed through this webinar. We do tax returns every day. It's not a once a year job for us. We know what we're looking for. We know what our clients should be claiming. We know when it's missing, and we'll flag that up to you. We are a bit like vets. We're required to do a CPD. We have to be up to date with current tax legislation, which means that, you know, you don't have to. I think we've shown that throughout this webinar, that certainly at Harris & Co, we will proactively advise if we think the trade allowance is better for you or the property allowance is better for you. We will substitute that by default. That's just one of many examples. The other thing that some clients are not aware of is that as accountants, we have a different way to phone HMRC. We have an agent dedicated line. So you don't have to phone the normal line and wait for 45 minutes to an hour if you're lucky to speak to an advisor. We've got a different line that we can ring and speak to a different team of people, and we can get stuff sorted for you, rather than you having to spend your precious time on the phone to HMRC, which people don't often know about. So I think we're worth it just for that, to be honest.
Yeah, I mean, direct lines for HMRC, who knew? I've definitely learned something on this webinar as well.
Yeah, and then also we as Harris & Co, we will always keep informed of upcoming changes. We're communicating with our clients about NTD, making them aware of what's happening, supporting them with it. And I think we can just sum all that up with the last line, that you give your finances to us, your taxes to us, so that you can focus doing what you do best, running your business. I think I've skipped a question there. So how can you avoid getting nasty surprises? I think, again, we've covered this all the way through the webinar. Be prepared, be organised, keep good records from the start, register in good time, save the right amount of tax from the very first invoice, if possible. So you don't end up with nasty surprises when you submit your tax return and you have a big tax bill. And I think we just covered that off. Speak to a good accountant. We're here to help. We're not scary. We want to help you. That's what we're here for. And we want to help you. We want to help you run your business. We want to help you succeed.
And that you definitely do. I mean, speaking from experience of having worked with you guys for a few years now, it's definitely been a huge support to me. And I know we've talked around a couple of different things here. So we've talked about whether we're looking at sole trader / self-employed, self-assessment, the dates that we can register for that £1,000 trading allowance, where we don't have to submit a self-assessment, but once we're over that, we know that actually we've got an allowance that would mean that we're not paying tax on that first 1,000. But you can go and submit that yourself. You've talked about the dates, you've talked about the process of how that happens, we've talked about the expenses to keep an eye on, to document, and you can transfer those as you go through that process of submission. But just so that people can bear that in mind, because I found it invaluable having an accountant on board, because there's so much stuff to do when you're running a business or you've got a successful side hustle. And having someone else that you know that you can send that off to and say, please help me sort this out, and you come back with it and say, it's all done, please check it over, is a godsend. But what kind of investment should people be having on their periphery if they did want an accountant? Or, well, I know you can only talk about yourselves and the costing from your end, but what is that investment for someone doing a self-assessment tax return with you guys helping them to submit that?
Absolutely. And I think it's worth saying as well that nothing's set in stone. When you're first starting a business and it's fairly simple, you might feel like you can do your own, and it might feel like it'd be more cost effective to do your own because it's quite simple. But that's nothing to say that, you know, in a couple of years' time, if things start to pick up, they actually might need the input of an accountant. So don't be afraid to pick up the phone at any point. An accountant will happily talk to you at any point in the journey of your business. And in terms of fees, it's difficult to give. We don't do fixed fees because our clients are all individuals, they're all different, and we will give a bespoke quote for every client, depending on their specific needs. But as indicative price, our self-assessment tax returns for a fully self-employed individual start at around 325 plus VAT. Can often be a bit less if it's a side hustle. And for a limited company, again, we start around 975 plus VAT to run a limited company as well.
Thank you so much, Nicola. And again, I've just popped a link into the chat box. If anybody did want to book in, you can book in direct with Nicola into her diary, book a call in if you are at the point of sending in a self-assessment, or if you want help with the limited company or help with accounting in general, and you're looking for a good accountant, they'll be able to tell you a bit more about what they do and what working together with Harris & Co would look like as well. So pop that in there. Again, I realise we have come over time, but I'm just going to give everyone a little bit more of a chance. If anyone wants to pop in any questions, you've got a burning question that you'd like answered now, pop it in the chat box. I'm going to give you a few seconds to do that, because I feel like we've answered so many as we've gone along here as well. So thank you so much for those, Nicola, because I feel like we've covered so much ground. Hopefully people have had their questions answered. And I can see we've had, I think, okay, so we've got a question which is probably more down the locum side, but if there's anything you can add on this, and I know we have covered this in other sessions as well, what are the pros and cons of using an umbrella company, which would be more for us considering probably locum shifts? So maybe it'd be good to start with, Nicola, what an umbrella company is, how that ties into side hustles, and the pros and cons maybe.
Yeah, you will see umbrella companies used where you have a contract with a main customer, if you like. So if you're working for a big corporate veterinary practice, or as a locum, or a big corporate locum agency as a locum vet or veterinary nurse, and they are used to basically employ you without you having to have your own limited company or your own employed business. You become an employee of the umbrella company, and the umbrella company will deal with invoicing your customer, and they'll deal with your taxes, and then you are left with the net fee, if you like, at the end of it, after tax fee, and then they will charge you a monthly fee for processing that on your behalf. So you most often see umbrella companies where you've got an IR35 situation, or you're working for a big corporate agency. But that is, again, a whole other topic or webinar in itself, really, umbrella companies.
Yeah, and I guess, like you say, that applies probably more so if we're thinking about side hustles as to locum work, rather than as maybe selling things online, or doing talks, or selling online courses. Obviously, side hustles look really different for everyone. And I can see we've just had a lovely thank you for this session. I'm so glad that's been helpful for you. And again, a huge thank you to Nicola and to Elspeth, because we fired loads of questions at you, loads that you weren't prepared for there as well. So you can see the skill level that they've got to give such intricate answers and such well-considered ones. And again, just like we find for ourselves with our own patients, regardless of whether clinical or non-clinical, sometimes the answer is it depends, because it depends on so many different things to make sure that you're set up for success as well. So just finally, as we start signposting some bits here as well, again, we talked about this at the beginning. We'd love to see some of you in person or on the live stream at VSGD Live, which is happening on the 15th of October. There are streams for students, there are streams for nurses, there are streams for vets. You can see just on here, we've got streams that we're talking about recruitment and retention, being your own boss. We're talking about green flags for employment. You will find us at the exhibition as well. You'll find Ebony and I heavily involved in running the day. So come and say hi to us. Tell us if you've been on the VetYou webinars. We would absolutely love to see you there. And I can tell you the early bird ticket price runs out tonight at midnight. It is an absolute steal, whether you're live streaming or you're coming to join us in London. We'd love to have you there. The people that you will meet, please never underestimate what the power of those connections can be. It might be the start of your next side hustle. You never, ever know. So I'm going to pop that link into the chat box as well, so you can jump into there. And then finally, a little bit of signposting from us at VetYou too. Make sure that you're registered and signed up for our newsletter if you haven't done already at vetyou.co.uk. We will keep you up to date. We don't spam you. We don't send loads of emails. We just let you know when our next free webinars are on. We can send recordings out to you. We'll send you resources, top tips, everything. And will there be recordings of the Vet Summit lectures? Good question. They absolutely are. You have 6 months of access to the recordings of the live stream and the Sunday recorded sessions as well. So 6 whole months to digest it all. And again, all 4 of those streams on the day are live streamed for you to check in on as well. It is an absolute steal at the amount of CPD hours that you get out of there. There is virtual networking as well if people want to still do the networking but can't get there live. So make sure that you jump on that link. It is going to be the career event of the year, and VetYou are really pleased to have a part of that and be present there too. So please do come along. We'd love to see you there. Signposting back to what we're talking about here. If you'd like to book a call in with Nichola and her team, I've popped a link in the chat. I will pop that link in again for you as well if you do want to talk through onboarding Nichola and team as your accountant. So you want a little bit of help in terms of making that happen, having support of an accountant on board. It might be that it's not the right time for you yet. That is absolutely fine. Just know that you can come back to us, hello@vetyou.co.uk, and we can make that introduction to you when the time is right for you as well, because we've had so much information this evening. Make sure that you join us for our savings and investment session, where we've got Ruth Downs, the financial advisor, joining us to talk all about savings and investments, where we can put our cash to make it start potentially working for us, especially with the levels of inflation where they are and interest rates changing at the moment. Make sure you're clued up on that. That is on the 20th of September at 7:30 p.m. Again, it's all recorded. So if you want to jump on that and get the recording, make sure you come along. And finally, don't forget, in the Vet Stay Go Diversify Careers group, myself and Ruth have been going live every Friday talking around topics from pensions, income protection, savings and investments, things to bear in mind when you're changing jobs, finances with children in mind, looking at how we can best prepare ourselves, being locums, making sure that we've got critical illness cover in place, why we'd need that. We've covered as much as we can do. We will be back a week on Friday. So if you've got topics that you'd like to see there as well. And I wanted to finish up with saying a massive, massive thank you to Nichola and Elspeth for being here and sharing their expertise with us. Thank you. We've had so many kind comments that have come in. I can see we've got, oh goodness, thank you for the session. Thank you so much. Thank you for sharing your expertise. Very helpful. Thank you so much. This has been really helpful. Thank you for your time and expertise. Much appreciated. Thank you. Definitely learned something and this has helped. Thank you. Thank you very much. Super helpful. I'd love to know what your key take home is. So if any of you have still got the time and capacity, drop us a comment in there about what you learned, because we'd love to share that with people to encourage them to watch this recording as well. So I'd massively appreciate if any of you would do that for us, for the time that we put into these sessions as well, to bring you experts like Nichola and Elspeth. And finally, a huge, huge thank you to all of you for being on here, whether you're watching the recording, because I know many of you will catch up. We've had well over 150 of you register, so I know many of you are going to be joining on the catch up. And for those of you that came live, thank you for gifting yourself the time and side hustles. Like, let's make it happen. We're so excited to have you on board here for the evening. Any other questions you've got for VetYou about anything financial, drop us an email, hello@vetyou.co.uk, and we can get you connected with the right people. So again, thank you, Nichola and Elspeth. That was fantastic.
Thank you, Katie. It's been a pleasure.
And I can see I've just had a couple of direct messages come through saying thank you so much. I'm so glad it has helped you all. I really wish I'd had this at the beginning of my side hustle journey, and luckily not too far into it, I did find Nichola and Elspeth and co, who definitely helped get me back on the right track. So it's a pleasure to be able to introduce them to you all as well. So thank you, everybody. I am going to stop our recording now.